Today, we are going to figure out how to enter the top 10% of earners in the United States. But more specifically, we're going to talk about how we can do that from trading. Trading that offers unlimited earning potential and freedom to work anywhere in the world. In order to answer the question of how we can do that, we're going to go all the way back to 2021 when I quit my job and became a full-time trader and lived solely 100% off of my trading income for 2 years. Making $10,000 a month from trading took an incredibly long time for me. And even when I did have my very first month where I made $10,000, it was many months until I had another month where I made $10,000. Trading is incredibly inconsistent and unpredictable. And if at this point in the video, if you are new here and you are skeptical, that is great. There are a ton of fake gurus online, fake coaches, fake teachers, and it's good to be skeptical. But again, I am only like a 4 out of 10 trader. I like to try and help traders that are 3s or 2s or 1s. But trust me, if I made this amount of money at like a 4 out of 10, you can make way more. Okay, let's get back to it though. Getting and making $10,000 per month from trading. How did I do it? First off, we need to understand all of the mistakes that I made starting all the way back in 2016 when I first got into trading. Pretty much all of the mistakes that you can make in trading, I did make. Starting off with courses. I unfortunately, pains me to talk about. I spent $10,000 on Forex courses. One of those courses was $5,000, so the other $5,000 made up a whole bunch of other courses. But all that to say, taking that many courses meant that I was continuously strategy hopping. I always thought that the grass was greener on the other side, that I was just missing one course, one influencer, you name it. If somebody was shilling it, I was buying it. And so that was the very first mistake that I made, because if I had just stuck with the first strategy that I learned on baby pips, I'm sure I would have made more money in the long term. Secondly, as most of you probably have experienced yourself, from 2016 to like 2020, I had zero risk management. Prop firms were not what they are today. And so I was always trading $1,000, maybe $2,000 personal trading account. And of course, even if I made 10%, that's $100. That wasn't going to do anything for me. And so I was risking way too much. I remember running the numbers and realizing that, if I only have 7 wins in a row that are all full margin, I'll be a millionaire. I'm 7 trades away. You can run the math yourself. I'm sure many of you have done it. The numbers don't lie, but of course the execution is different. But that tantalizing figure, that tantalizing idea of being 7 trades away from being a millionaire, of course led me to over-risking, blowing countless accounts. So too many courses, strategy hopping, not being risk managed, didn't go all in. This is one that isn't talked about enough online. You see, I moved out of my parents' place in 2020, moved 45 minutes away, and I quit my job in order to do so. And I could have gotten another job, but for years, 4 years, 5 years, I've been trading. I've been trying to make trading work, but it was not clicking. I was half-assing it. I was focusing sometimes, not focusing the other times. And so rather than getting a new job, I said, you know what? I've been trying to do this for so long. I'm so passionate about it. Worst case, I can always get another job. I had 12 months worth of living expenses saved up. So I said, you know what? Let's go after it. Let's force ourselves. Let's put our backs up against a wall and force ourselves to make it happen. Unfortunately, in hindsight, it was the very best decision of my life. It's the best thing that I've ever done because I forced myself to make it work. Whereas if I hadn't gone all in and I just continued to half-ass it, I probably would be exactly where I was 4 years ago. One more thing that I did completely wrong was I went down the deep rabbit hole of fundamental analysis, which I think is still important. You need to understand how the market functions, how the world functions, because that is what drives the markets. However, I eventually realized that I became an analyst and not a trader. At the end of the day, there's only 2 options. You can buy or you can sell. And it's so easy to get caught into the weeds and go into all of these microscopic details, but it turns you into an analyst and not a trader. So that was another mistake that I made that slowed me down about 9 to 12 months because there was a period where that was my full and sole focus. Okay, but fortunately, now that we have all of the bad news out of the way, things did work out. Things did eventually click for me. So the question is, what did I do right? One of the things that I did right from the very beginning was that I realized that the focus needs to be on capital rather than returns. I see a lot of people online talk about making 5, 10, 15, 20% a month, but that's simply not sustainable without gambling your account. I'm sorry, gamblers, but it is not. The very best funds in the world don't even generate close to those kinds of returns on a monthly basis. So you are not going to be the exception. come at me in the comments. But if you shift your focus rather to gaining more capital rather than a higher return, completely changes the game. I always ask myself, how much capital do I need to live off a 1% monthly return? The S&P 500 generating 8% historically. Annually, I think going for a 12%, 15% annual return from trading is more than realistic while being risk managed. And so asking yourself that, how much capital do you need to live off 1%? For me, I needed 100,000 to 200,000, depending on what my expenses were. Minimum during COVID wasn't going anywhere. My rent was $900. I needed like $100,000 funded account. Eventually went up to $200,000 funded account to make 1% a month. And again, I'm in Canada, so it was US. Anyways, bit of a tangent, but that's a good question to ask yourself. Another huge lever that I pulled in 2020 after I quit my job was once I took my very first challenge, I was so terrified of losing the $500 that I spent on it because I was broke and I didn't have any money coming in. I finally decided to focus. Well, I forced myself to focus and only take A+ setups. This made a huge difference for me. I would always ask myself, if I failed my challenge because of this trade, could I live with myself? If the answer was yes, fantastic. It's part of my trading plan, execute it. I can live with the result. But if the answer was no, I knew that it wasn't an A+ setup. And so I just didn't take it. But shifting my focus on quality over quantity, so simple, but made a huge difference for me. Lastly, speaking of trading plan, this one is even more simple than the last one, but was a huge game changer for me. I literally took pen to paper and wrote down my trading plan. And you're probably thinking, oh, I don't need to do that. It's not going to make a difference. Trust me, it made a huge difference for me. And the reason for it is you and I, we both have the trading rules in our head. We say, this is our strategy. This is what we're going to do. This is how we're going to execute it. But when push comes to shove and you actually need to execute the trades, those rules, if they're just in your head, become malleable. You can start to justify doing things and taking trades that don't really fit your trading plan. Whereas if it's objectively written down on paper, it's right there. You can't argue with it. It is right there. And so if you have a losing trade and it doesn't fit your trading plan, you only have yourself to blame. And so it really takes a lot of the guesswork out of it and it makes it so much more objective. So writing down a trading plan with a pen and paper made a huge difference for me. Believe it or not, all of these three things combined made the biggest difference for me. My trading strategy was very simple. It was about finding 2 to 3 confluences on a high time frame, executing the trade with a pending order, and going for a minimum of 1-to-1 risk to reward. Very simple stuff, but it's these three things that really made the difference for me, finding a little bit of consistency every once in a while to making enough money to actually sustain myself 2 years living only off my trading income. Now, for 90% of my trading journey, I was focused on growing my own personal account, which was just absolutely brutal. Props weren't the thing that they are today. The industry has completely changed. But this brings up an interesting discussion with, one, how quickly moving the industry is, and two, what people often say online of still continuing to trade your personal account. What is the best way to actually make that $10,000 per month? Well, let's run some numbers and answer that exact question. Okay, so the question of this video, the thesis is, how can we make $10,000 a month from trading, and what is the easiest, fastest way of doing it? Okay, so I want to run a comparison between a personal account and a funded account. So let's say a personal account, you fund it with $1,000. I think that is a very manageable number for a lot of people. In order to make 10K in a single month, you need to make a return of 900%, which is just absolutely insane. I think we can pretty much end the discussion right there. But that's a 900% return with no withdrawal. So even if you start with $5,000, you would need 100% return just to turn that trading account into $10,000. That's 100% return, which is just absolutely mad. Remember, I said I think like 12, 15, maybe 20% while being risk managed is achievable on an annual basis. So that's why, unless you have a whole bunch of cash, I really don't think that trading a personal account is going to be the way to go. As a little side note, I recently put out a tweet that got a lot of hate. I, of course, am biased, but I don't believe anymore in trading a personal account. Even when I got funded with FTMO back in 2020, I immediately stopped trading my personal account. If you receive a payout from a prop firm, you have entered the 5, maybe 10% of traders that pull out money from the market. And are you going to take that money and just plug it right back into the market? To me, that's silly. I would much rather diversify it, invest it somewhere else. And if push comes to shove, you need to fund a personal account, the money is still there. But I don't believe believe in just taking a payout and just plopping it right back into the market, right back into a personal account. Let's now run some numbers for a funded account. Let's say you purchase a $100,000 evaluation account for $500. Let's say you pass. Of course, that is a big if, but this is assuming that you put in the work, you know how to trade. If you make 5% a month, you make $5,000. Now, that's insane. 5% a month is huge. Again, is it sustainable? I think you can have some outsized returns, outsized months worth of returns. 5% can be done every single month, perhaps not. But if you make that 5%, you're making $5,000, which is just wild. So in order to make that 10%, you would then want to pass another evaluation, get $200,000, and then you can hit that 10K a month. Now, listen, you can play around with the numbers. The reality is, by having these funded accounts, some people on Twitter have millions of dollars worth of simulated funded accounts. You can play with the numbers, the returns, the monthly returns to hit that 10K a month mark. So if I was starting from the very beginning and I knew nothing about Forex, but just came across it today, my sole focus would be on taking an evaluation once I have developed my edge. Again, do not sign up for an evaluation until you are consistent, until you know your trading plan, you know your edge. But I would focus solely on passing one of these evaluations and getting funded. And then my focus, once I got my first account, would be on increasing the capital, not the returns. So many traders get that funded account. They think they've won the lottery. They increase their risk. They try and have this huge monthly return, but they inevitably blow the account. So it's all about capital over returns. If you get one takeaway from this video, I hope that it can be that. This perhaps is by no means the easiest way to hit 10K a month. Perhaps there are alternatives that will help. There are certainly ways outside of trading that might be easier than trading. Trading is incredibly difficult, but I do think that this is the smartest path. This is the path with the least amount of risk on your end. And I do think, coming from a trader that started back in 2016, that evaluation firms are continuing to change the game for traders. They're not perfect, but trust me, somebody who used them to live off of trading income solely for 2 years, they are an absolute game changer. I'd love to hear from you guys in the comment section. If you have any comments or questions, drop them down below. If you made it this far, you are going places. We'll see you in the next one. Until then, peace.